Markets are melting down. Are we doomed? Look, let's take a look at the bigger picture. Of course, if you are watching this on the replay, use the time codes below. But if you want to enjoy everything we do live in terms of gold and silver and platinum analysis, we'll talk about what's going on in the markets at the moment. We do your live questions, we do live chats and everything. If you want to enjoy that live, you get to enjoy everything we do here at Good Morning Stackers, your weekdaily live show all about gold, silver, economic news, and all that other fun stuff, including the Synchronised Slurp. If you haven't witnessed it or taken part before, now is your chance. You grab a tasty beverage of your choice. I will not judge you. And we slurp it synchronously within the first 1 minute of the show. You have to audibly do it. It is the honor system. Here we go. In something like 3, 2, 1, slurp it. Who the hell am I? I am Joe Main. I have been a stacker of precious metals for 14 years. I've also worked in the Australian bullion retail industry for 11 years over multiple deals, including my own one at one point. Now I do this show, and should you listen to me? Not really. Why should you listen just to me? No, listen to all and follow none. As someone very wise once said, it wasn't me. But I do this show and we do our shout outs and everything first. Again, use the time codes below to go straight to gold, silver, platinum analysis, and we'll talk about what the hell's going on in the market at the moment. We'll zoom back at the bigger picture. Are we doomed? But I'd like to say a quick welcome to a whole bunch of people. Of course, my regular GMS family. We'll do the shout outs in just a second. Of course, people from the Savvy Investor Club as well on Facebook, all the people watching from the Gold and Silver Stackers Australia Facebook group too, and of course my Reddit watchers as well from Wall Street Silver and Silver Degen Club. We've got lots of people watching today. Interesting. Gee, wonder why. Again, my perspective is my perspective, and you just take it as one, and you should be listening to everyone. So of course we'll do some quick shout outs. Of course, Hazza, GMS, hi everyone. This is what you do if you're new to the show. Hit the big red subscribe button, join the GMS family. Just so you know, thanks to all the new subscribers overnight, 536 as of right now. I only started this channel in May, and already over the 500 mark. We gave away a silver coin at the 500 mark. We'll do another silver giveaway at the 1000 mark. I think that's going to come pretty soon based on the metrics. So join the GMS family. Bought me some unallocated silver overnight, says Jason Ashworth. Fantastic. Okay, good stuff. Some people love unallocated, and some people are like, if you don't hold it, you don't own it. I get both sides of the coin. I have also personally owned unallocated silver myself from, from the company that I worked for at the time, which was Bullion Now. If you're not familiar with Bullion Now, I think you probably would be if you're in Australia. I was their first employee, and I launched and grew their YouTube channel. All those videos you've seen with the nearly 1 million views and hundreds of thousands of views, that was me, baby. So you may recognize the guy in the glasses. But yes, I bought unallocated silver. Not recently, but I've bought it before. Morning, GMS, says Mark Florida. Looking forward to Joe's take on the recent market insanity. CT says GMS from the Lone Star State in Texas. We are streaming on YouTube, not Facebook and Twitter today because, again, doesn't like me for some reason. Debt is great. Anything much been happening in the markets lately? Hello, Helen. Great to see you. Helen now shoots. We'll go with that. GMS, great to see you on the show. Helen. Black Coal says GMS, Ashes Gold Adventures. GMS, Mark Florida, having some difficulties. Is Joe live? Well, I'm live right now. GMS, Pete Repeat, Arthur. You've got me now, that's right. Hazza, live and active. David Williams, good morning all. Jason Ashworth, office was not impressed with my slurp. Bad luck. Desi, hey, didn't want to miss this live stream, of course. Love Bullion Now. I love Bullion Now too. I worked for them for 3 years. Amazing company. But I will talk about my brand partner a little bit later in the show. Morning, mate, says Damien Gaia. Great to see you. I haven't seen you on the live show before. Morning, mate. Very keen for this one. Lots happening. Seems like you've been a long-term subscriber, first-time live watcher. I haven't seen you on the live show. So fantastic. Okay. You've had a few minutes to get in. So markets are down. Markets are down. Let's take a quick look, of course. We'll share the screen. I don't know whether we're going to do the gold, silver, platinum analysis first. Let's maybe we'll do the silver and gold platinum analysis first, but look, we'll just show you some other things. The markets are down, of course. Japan, BOJ, Bank of Japan, all this other stuff, okay? Let's see, I'll share the screen. Maybe I'll just show you the SPX to start with. Where are we? SPX. Oh no, it's down. Dun 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 dun. Okay, so here we are on the daily time frame from a few days ago. We were at, where are we? 5,560 something. So we've seen so we've seen an 8%, a 7 to 8% correction, and the market's in meltdown. Boom, 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 boom. Let me give you the short answer. I'll give you the short answer and then we'll look. Don't stress. We'll all be okay in the end. That's kind of the big one, really. What I won't do here at this channel, and a lot of people appreciate it, is I will not give you predictions. I tell you percentage chances for, silver going to this best buy zone, X percentage chance. Well, we're over a certain support level. While we're under a support level, becomes resistance. Certain percentage chances. I never tell you the market's going to crash and it's all doom and gloom and all that stuff. I'm not a doom porn guy. If you want to go do that, find someone else. That's fine. And I'm generally optimistic about the world because we've always come back every single time. Okay. And we also can't see what's down the track in terms of technological innovation and all that. So if people were saying, and they were really worried about climate change, okay, well, it's long enough down the track that people will find technology to either pull carbon out of the atmosphere, if that's even a thing that we should be doing. I don't know, and neither do you exactly, because, we learned a lot about science over the last few years, didn't we? And scientific experts. But during given a long enough time frame, everything will be okay in the end. And this will be fine. We're in a meltdown. It depends on your circumstance. Are you 64 and turning 65 this year and you're looking for, and you put all your money in your super and, you don't want to see that, superannuation being... that's Australia's version of 401k, just for my international subscribers. Superannuation is 401k for my American subscribers. Okay, it depends where you are in the world. It depends where you are in your life. Are you getting to retirement age really quickly? Okay, that's more concerning for you. Are you in your 20s with no family and you can wait for a potential 50% drawdown in the stock market? Brilliant. Do you have enough spare dry powder, meaning spare cash, that if you're in your 40s like me, you have a family, you've got a steady job, and you've got some spare cash up your sleeve for that 50% drawdown to buy some Tesla stock or to buy some this stock or just buy the S&P 500? Cool. That's okay. This meltdown thing, I think we're all okay in the end. Might we go through a recession? Yeah. Okay, as long as you are hedged, as long as you have some kind of insurance. And why do we buy? Where is it? Why do we buy gold and silver? Why do we buy gold and silver? We buy it for, and I think you should be buying it for, insurance. Let me go like that. You can see it close enough for jazz. Why do we buy gold and silver? You buy it for insurance. In my humble opinion, and I am giving you financial advice right now. This is financial advice, and this is probably the first time I'll ever say this is financial advice. If you are buying into precious metals for the sole reason to make a butt ton of money, then don't do that. You are buying gold and silver as insurance against harder economic times and over long periods of time to maintain your purchasing power. Now, you might be buying silver over gold for the potential play of silver against gold because you're willing to take more of that risk. That's okay. But if you're just buying all gold, you're putting 10%, 20%, 30% of your portfolio into gold as a hedge against something bad happening. Good on you. You don't get into it to make a whole bunch of money. and you certainly shouldn't be getting into it, in my humble opinion, to hope that the whole market melts down and you get crazy rich versus everyone else. No, that's not really good, in my humble opinion. And I'm giving you my full opinion here. If you're getting into it to go, ha, screw the rest of you, and I'm going to be in my castle on the top of the hill, and everyone else didn't get into precious metals or didn't get into that particular investment, and I'm, Duck McScrooge, Scrooge McDuck. Yeah, you're doing it as insurance against hard economic times. You're also doing it to potentially help people, your friends, your family, your neighbors, as well, your community down the track as well. So you buy these things for the insurance factor. So number one, you don't get into it to make a lot of money. You're hopefully getting it to maintain your purchasing power and maybe increase your relative wealth against other people's over time. Now, you can make a lot of money. If you bought gold in the early 2000s, sold it in 2011, great. If you bought silver around about that time in the early 90s, in 2000s, and then sold it 2011, fantastic. But that's my take on that. Don't get into precious metals to make a whole bunch of money. It's insurance. And that's the way I always tell everyone. Now, let's take a look at, we've got to keep taking a look at the market. So, I'll go back to the SPX. Now, just let me give you of course, this is the big indicator. The US stock market is basically the biggest indicator of, the health of the economy in general. Let me get rid of that. And let's just take a bigger picture look, and then we're going to do the specific gold, silver, and platinum analysis as we do every single weekday. Hit the big red subscribe button to join said family. Okay, so here we go right here. We've had, again, from the high, and I'll do it from the high of the recent high rather than just the last few days. But in the last few days, it's been an 8% decline. Those who are in gold and silver in particular, is more volatile than gold. And any of those of you who are in crypto, okay, we can also talk about crypto if you want. An 8% move in crypto is like a 1-minute candle. Okay, it's nothing in this market. This is why I'm not so fussed. I've been in crypto since 2013. Have I made a butt ton of money from it? Nah, up and down because, cycles and all that stuff. I make the mistakes that everyone else does too. But ups and downs, a 10% move in a day for a particular crypto is like, oh, geez, that didn't move much. So I can look at these and go, I can look at these big macro moves and go, this is not that bad. So let's just go back to the S&P 500. Going back to, where's this? Oh, 1932. Okay, so we had that big move. Here, let's see, in 1929, we had now look, that was the big one, and we had an 85% move in the stock market, okay? Yeah, big move, wiped out a whole bunch of people, not good. That's why you do not want to be all in the stock market. You do not want to be all in crypto. You do not want to all be in precious metals. You want to have cash saved up as well, just cash to buy the everyday things that you need to buy. Okay, you need to save your cash as well. But that's the biggest one, 85% drop. Okay, since then, look at this. The SPX 500, basically the proxy for the entire global economy. Right here, let me show you. Very clear trend lines. And we've been in an upward movement since then. And over time, gee, what do you know? It gets a little bit overbought and then you have some corrections. Okay, cool. That's life, man. That's my entire analysis for today. Yeah, that's life. Right there, you have a 50% decline. Okay, that's in the 70s in the SPX. Why does that keep doing it to me? That's very annoying. Right here, you had a decline in the, that was the good old, look at this. There was the 1987 crash. Apparently, the crash right here of about 36%. All right. But then in 89, 2 years later, it was back to where it was. Okay. All right. The people who got wiped out from all this were the people that had all their money in stocks. Don't have all your money in stocks. Let's take a look at the dot-com bubble of 2000. Okay, we went down, what do you know? Round about 50%. Okay. And then in, of course, the GFC, which is a black swan, which, most people couldn't see, you had a move of, what do you know? Around about 50%, 55, 56%. Okay, cool. And then we had the COVID scare, okay, black swan event that couldn't be seen. Didn't know it was coming, but a 30% move. Okay, cool. So what do we know? And this is all stuff that the Savvy Investors Club and you guys already know, but I'm just kind of really going to point this out to people who might be finding this newbies to economic stuff and just newbies who might find this video later on. Okay, barring this kind of stuff here, but what did we see? We saw a huge move in the 20s. So what we actually saw right here was after we broke a bit of resistance at around about $10 in the stock market, it rocketed 215% in the 20s. Okay. Yep, that's life. You have a massive, massive run up and sometimes things correct. That's pretty much it. So that's what happens. You made 200% here. Now, were you not savvy enough to take some profits along the way? Did you not? Get rid of that bloody thing. Did you not in the 20s? Now I'm talking to your dead grandparents here, or your dead great grandparents here. Did they not take some profits along the way? Did they not make 100% here and then sell half, and then have some dry powder up their sleeves? Did they not get a little bit euphoric and went, "Oh, this is really good. I think I'm going to take some profits off the table." Okay. Now, I'm not saying that it, sucks to everyone that the people who didn't. No, people got wiped out, and people got, can get hoodwinked by the people they listen to, the media at the time as well. The media has a lot to do with it as well. So, but, there are huge times where you have a big run up and then you eventually have a correction. So would it be surprising, and by the way, I don't give predictions and I'm absolutely not saying the following, but would it be surprising if you had another 50% correction from the current top? Nope. That is not surprising at all because you have had them over time. But what happens every single time, or what has happened every single time, you have some downward movements. Let's see. So how long did this last? Let's do the range stuff right here. So let me move that and let me move to this. And we'll get to gold and silver and platinum analysis in just a second. From the high to the low, that was a number of days. That was, what are we talking? That was a couple of years down, and then we bottomed. And then it took, so from 2000, it took 8 years to get back to where it was. So that would have been painful for people who had just bought into the market. Of course, you can't time it perfectly. So yes, you can really get wrecked, but you're not putting, obviously, all of your money into the stock market, are you? I wouldn't imagine that you would be. Okay, it always springs back. Okay, here we go in again. The Black Swan event of... Now, see, I would call this the dot-com bubble, not a Black Swan event. That's not something that came out of the blue. That is, whoa, look at this, NASDAQ. That's getting a bit overextended, isn't it? There we go. The GFC, a lot of people said that they could see it coming, but it wasn't really, really obvious. I don't think, at least. And so that was more of like a Black Swan event. And so that took a little bit, roughly the same time, I guess. Let's have a quick look on the range. So this is each candle is a quarterly candle. So that's a year, that's a couple of years. So where are we talking? 2007 to roughly, get out of my way, 2013. So 6 years, so less time to get back to the peak of that market. But, imagine if you had have bought down here and then, you bought some up here, but then you didn't spend all your money. You didn't put all your eggs in one basket. And then you saw this move here. You look at the historical chart of the SPX 500, the global stock market health, really, the health of the economy. And you're, okay, Black Swan event, It's probably not going to last forever. I'm going to wait until it looks like a decent low point. 50%, 40, 50% is usually pretty good. Okay, so I'll get some stuff down here of my favorite long-term stocks, or in particular, you buy the S&P 500 because it's an average, and you shouldn't really be buying individual stocks unless you know really what you're doing. So right there, so that took that amount of time. So it took about 6 years roughly, and very quickly, again, this is the big macro view. So now we come to the Black Swan event of March of 2020. How long did that take to get back to where it was? Right here. So that's February of 2020. It started moving down, and it only took us until August of 2020, in the same year, to be back in the stock market to where we are. Okay. And this one here, for example, let me give you the fixed price range. We 48.20. Oh, gee, we had about a 30% move. This stuff isn't surprising to see. That's all I'm trying to tell you here. Okay, so if we saw, where are we? That's that 10% move. If we saw, for example, and definitely not saying this, if we see a move back down to here at 4,800, that's a 15% move. That's not surprising at all. If we have a move down to here, 20% move down to 4,600, not surprising at all. If we come down to here, right, which is a bit of a support level, you can see right there, it's about 4,200. That's a roughly 30% move. That ain't surprising. If we come back to test major support right here, is that a double bottom? If we come back to test 50% or even, heaven forbid, 60%. Now, that would wipe out a lot of people, and it's not great, okay? I'm not saying this is going to happen at all, but just out of interest, any move like that, it's not out of the realm of possibility, and I would say anything up to about 50%, roughly, is not surprising, okay? It happens. That's the short answer. And what happens every single time? The S&P 500, the stock market, the health of the economy, it comes back. It always does. After a long run, it comes back. Does that make sense? Let me get rid of all of that. After a long run of January 2009, okay, blah, 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 COVID, and that little bit of sell-off there, it always comes back. Could it come all the way back to there? Yeah, I don't see that personally. But we always have, and probably always will, come back in the end. So now might be around here. Is it 10% more down? I don't know. Should you be dollar cost averaging into the SPX maybe over time? Yeah, maybe that's a good way to do it. But we always come back in the end. And if we didn't, well, it would be a cataclysmic, the world is screwed thing, and you should be worrying more about getting your next meal than the stock market going down. So that's my general feeling about it. I want your feeling. Where do you think we're going to continue to go? So we will do now gold, silver, and platinum analysis, because they are somewhat inverse. But we'll take a quick look. I'm going to read you your quick. Here we go. Comments right here. Daniel said 100 billion wiped. 100 billion wiped. Yeah. Until it's not. Until it comes back. Talking to each other. I love that. Morning, guys. Morning, knackers. Any quick thing? Daniel, okay. Save cash. Why save something that only ever depreciates? You save cash because of this. This is why you save cash, Daniel. You save cash. You have some spare dry powder up your sleeves in case there's a big dip, in case there's a 30% dip in the stock market, in case there's, for some reason, if you're really looking at one particular stock, I'm keeping my eye out on Tesla in particular. I haven't bought in. I did buy in a little while ago, got out. Now I'm going to get back in eventually when it's right for me. Why Tesla in particular? I shouldn't really gamble on individual stocks, but I'll be getting into it for the self-driving car play and the robot play, which could be a $20 trillion industry if Elon Musk is right. So I'm looking at that. But you want some spare dry powder up your sleeve in case there's a 30% drop, a 50% drop in Tesla. Boop, boop. boop, boop. Right? That's why. Or whatever that is for you, whether that's silver has a big dip down to that level, which we'll talk about, or gold or whatever. You want some dry powder. And you also want to save cash for emergencies. What happens? In my opinion, you should always have at least around a couple of grand spare in physical cash somewhere that is easily accessible. At least a couple of grand for emergencies. Okay, so what happens if there's no emergency, but you have a big dip in Tesla or a big dip in whatever? Another COVID happens and you have that sort of black swan event. Load up on your silver, load up on your gold, that 2 grand extra spare. I mean, you kind of want to keep that spare cash just for spare cash as the rainy day fund. But yes, that's why. Do you want to save the bulk of your money in fiat currency? Hell no, because it does depreciate over time. Yeah, I do agree with that. The whole GMS family is in today. Where is Chat Mum? She is here too. Lance says, I've been averaging some buys over the last couple of weeks. All right, we'll get to all of that. All right, let's do it now. I'll do it now. Okay, let's take a look at, let me get rid of that. Time code, let's take a look at gold, silver, and platinum analysis. Again, I want your opinion, particularly from the savvy investors that might be joining us from the Savvy Investor Club. Give me your larger take on the market and the economy, where you think it might be heading in the interim. Do you think we're going down another 20%? Are we going to have a big 50% move in the SPX, for example, over the long term? Over the short term, I should say. So give me your opinion, and also Redditors, and I want my normal GMS family opinion as well. But we're going to take a quick look at gold, silver, and platinum, actually. But first, a message from our sponsor, my brand partner, Perth Bullion Exchange, perthbullion.com.au, Australia's first dealer to offer you free shipping when buying over certain quantities. No other dealer in Australia has ever dared do it. They didn't think it was economical enough, or they just didn't think, I just couldn't be bothered. Perth Bullion Exchange stepped up and went, nope, I'm going to do it. Ricky from Perth Bullion Exchange said, no, I'm going to be the first dealer to offer free shipping when buying over certain amounts. Buy a tube of silver coins, buy a tube of maples, free shipping, Australia-wide, insured, express shipping, sign-on delivery, tracking number. Come on, man, it's ridiculous. You can even buy this week's special, which happens to be, if I type in special in the search bar over here at perthbullion.com.au, you will see that this week's special happens to be the sheet of 25 gold maple gram, 1 gram gold coins. So you're getting them for $25 off. But then if you buy over 3, then you get free shipping. But if you buy 1, but then buy 19 other things, whatever it is, the cheapest thing on the website, 1 10th-ounce silver coin, you buy 19 of those, just takes your shopping cart total to 20 or more items, instant free shipping. Right? So you don't even have to spend $12,000. You don't have to spend $10,000 to get free shipping, right? You can spend as little. Get this. This is ridiculous. Look at this. You can spend as little as, and this is the crazy thing, right? Very quickly, and again, I've got to give my brand partner. They do sponsor the show. They are my brand partner. But you can spend as little as, get this right, 20 add to cart. Okay. Now you're paying a higher premium, but they're 1 10th-ounce because they're 1 10th-ounce silver coins, right? Let me get you some knowledge here. You can spend as little as $300 Australian for quantity. Why would I 39? Oh, sorry. That's even less than that. Sorry, let me do that. That's even less. Update the cart. You can spend as little as, this is mental, 157 Australian dollars, and you get free shipping because the quantity in the cart is 20 or more items. Now, why can they do this? Why can they offer the free shipping? Because obviously you're paying a higher premium for these 1 10th-ounce coins, so they're making a slightly higher margin. Okay, so then they just absorb that shipping cost because of the higher margin. So play around, buy a bunch of things, and then buy a few of these to get yourself up to the 20 mark. And the instant free shipping, it's the craziest thing in the world. So that's why they are my brand partner, and for a bunch of other reasons. Now let's look at silver, gold, and platinum. Get your comments and your questions in, and we'll do those at the very end. Let's take a look at, we'll do gold first. So this again, that's the Perth Bullion Exchange. But let's take a look at gold. Okay, gold on the quarterly time frame. So we'll go back to the daily. Okay, let me pop this on auto. We are using the logarithmic scale as we always do. And this is the tradingview.com website. It's priced in US dollars. I will look at Australian dollars very quickly because we did make a new all-time high in Australian dollars for gold yesterday. But I do base everything I do on the US dollar. Why? Because it's the world's reserve currency. It's the world's spot price that we all kind of use. And don't forget that your currency, wherever you are in the world, floats against the USD as well. So you've got that extra thing that you've got to think of. So that's why we do the USD mainly. I will look at AUD very quickly today. 2000, okay, we're back above 2,400. Okay, as you know, I recently raised my final hurdle for new all-time highs from 2,400. It was around about here. And very quickly for my new subscribers, all the new ones overnight, I've had this drawn in. Since we made this high and this low, I put in 2,400. And then I said, we will not see new all-time highs in gold until we close any day above 2,400. If we close above 2,400, we're going to make a new all-time high really soon. Then we made a new all-time high really soon. We then broke back down 2,400, came back down to this general range, and I said, I'm going to keep that at 2,400. If we break any day, close above 2,400, then we're going to make a new all-time high really soon. We then made a new all-time high really soon, and then it happened to coincide with this trend line, which I had drawn in around about this time frame. That was really obvious, you know, that point, yeah, it's really obvious, and then we did find that level. Okay, so that was correct, even though it's a very obvious level. Then I said, watch out for support at 2,350. That's a line in the sand you do not want to cross. We then found support at 2,350. However, in the interim, in between here and here, we made a spike to 2,430 US dollars. And then it took me a little time, but I decided I'm moving my final hurdle from 2,400 to 2,430 US dollars. That's the new hurdle that we have to close above and stay above to say, new all-time highs coming soon. Unfortunately, we have not remained above that. So it's because of this high and this little high right here, okay? And this spike, I didn't like that spike. So we did find support at 2,430. It was a failed move to make a new all-time high so far. Oftentimes from a failed move comes a fast move in the opposite direction. We sailed through 2,430, which for me now, I think, is still that final hurdle for new all-time highs. We've got to climb above there to say coming really soon. And I meant in weeks, not in days, but I meant in weeks, not in months and months and months from now. But with this little market meltdown, quote unquote, we have seen yesterday a move back down into this range between 2,350 and 2,400. This is the no man's land for me. Okay, so we found a low of 2,365. Very much remained 2,350, didn't even get tested as support. Okay, so that's a positive move so far for gold. And we are currently at that 2,400 level. Let's take a look at the relative strength index on the daily time frame. We went into the top range of the overbought range. So we didn't get into extremely overbought, but in the top range there. And then we have been trending down. A bounce looks like a relief rally as such, and we are trending down. So we're trending down on the relative strength index, okay, on the daily time frame. On the weekly time frame, as you all know, we've been talking about the fact that we've already been in extremely overbought on the weekly time frame. We found that bounce, and so far, it's only Tuesday. So far, we're trending down, but we have to wait to see what the close of the week does. Okay, so basically, I don't have a lot to say for gold other than while we are in this range here, it's the no man's land, and it's still, in my humble opinion, anyone's game. I don't give predictions and say definitely heading down to my best buy zone. Out of interest, my best buy zone is between 2,250 anywhere down to 2,150. Why is that? Why is that, you ask? Because we've had a big breakout of this level here. That happens to be 2,080 US dollars. That peak in 2020, the second peak in 2022, The third one in 2023, which was the triple top that doesn't happen. We had the consolidation, and we've had a decent move. So coming back to 2,250 to 2,150 roughly, I'm not saying we're doing it, but it's just not surprising after you have a big move out of this huge level of 2,080. Come up to here, back to here for a bit of a test. It's not surprising, okay? That's why it's the best buy zone for me. Should you be dollar cost averaging? Yes, you should. On the positive sides, this is why we're in the no man's land territory. Between here and here, it's anyone's game. So that's why I would watch 2,350. If we close, particularly a month, that ain't good. If we close any month below 2,350, then we are almost definitely, and I'd give it like 90% chance that we'll be seeing at least this trend line here, and that's at 2,300, call it, but you're probably going to be testing the best buy zone. I'd say if we close any month below 2,350, then it's like a 70% chance that we see the best buy zone hit right there. But we're not there yet, okay? So that's why I give just percentage chances. If we break and close a month or even a week back above 2,330, then I'd actually say, no, we're back in business, and it's new all-time highs coming in weeks and not months and months and years down the track. So that's pretty much it for gold. It held up very well against this market meltdown, okay? Let's take a look at it very quickly, I want to take a look at it against the SPX. So gold and the SPX. Mate, it held up pretty damn well. Look at this. This is on the weekly time frame. So again, this is gold against the stock market index. Okay. No, that's GDX. Sorry, that's GDX. I want gold against. Sorry, my apologies. There we go. It has held up really well though. Okay. Look at on the daily time frame. Look at people on the daily. You had an 8% move in the an 8% move recently in the SPX. The S&P 500. Gold has actually really outshone at the moment. So take a look at gold, where I will do a larger video on the gold to SPX ratio. We're coming towards a real inflection point here. And right here, you can see this is, again, gold against the stock market, US stock market right there. You've had that line in the sand of the halfway mark, 0.5, for a very long time. It tested it once. It tested it once in June of 2022. It tested it a second time or a third time in May of 2023. We've just broken out again. This long-term downtrend line going all the way back to September of 2011 with the peak of the gold market. Okay. Where are we? In April of this year, we peaked above it, but we closed. This is a monthly time frame. Each candle is 1 month. We closed the month below it. So it made a play for it. It was a failed move. And then it went, no, not just yet. Man, in August of 2024, unless we see, and look, we certainly could. We could see a big dip in gold and then it heads back down and it closes red for this month. And we're only at the start of this month, okay? But I would suggest if we close this month or any month above this downtrend line right here, that's a signal for me personally. That's a getting excited. So for me, closing any month above this downtrend line, whenever that is, if it's all the way down here or around about here, that's me getting excited for gold against the stock market. They would also be getting a lot of other savvy investors excited about gold against the stock market, because really, this is the big one where you might see a big transfer of wealth from the stock market over to gold if we remain above this downtrend line, and in particular, the final hurdle. And I've been thinking about this for a long time. I listened to other people that have also been saying this as well, so I agree with them. That 0.5 mark right there, if you close any month above, at or above, I'd say roughly, you'd want to be above the 0.5 mark for the gold to stock market index. That is signaling to a lot of people that that stock market is turning over against gold though. Stock market could be continuing to go up, but gold could be going up higher. So people want to be where they're winning the most. So you would see, I think, a lot of people moving a lot of their money from the stock market back into gold at around about this ratio if it closes above it. Okay, so that's my feeling on the gold to stock market ratio, and I gave you my gold fiat dollar price in US dollars, currently hovering in that sort of no man's land again. Close above 2,430. The party continues. New all-time high coming, within weeks and probably not months and months and months. Close below 2,350. Then you're looking at that best buy zone much more likely in sight. But that might be really good news for you. You might have only just started investing in precious metals around the last few months. Hey, fantastic for you. You get to dollar cost average. You get to average in your price down. Great for you. Over the long term, I am still very positive for gold. Very positive for silver as well. Watch out for my top end here, 2,875 to 3,000 US dollars. I'm not saying that's the peak of the gold market forever. I'm just saying that's a level of resistance to watch out for. That's all. That is gold. Let's take a look at silver. So we did gold and silver. We did gold against the stock market. This is silver. Back down into my best buy zone. Back again. What were we saying yesterday and the day before? I really needed to see it close above 29. While it's below this trend line here, and while it was below 29, the likelihood of heading back into the best buy zone was like a 70 or 80%. I think you have like a 70% chance that we head back in. I did mention that $28 would be the level you would want to hold. The day before yesterday, we did see it hold as support. I did say watch out for that because it's a level of resistance. This is obvious stuff, right? But we failed to hold it. Oftentimes from a failed move comes a fast move in the opposite direction. $26. We went back into $26 area for silver. Okay, $26.50 USD per ounce. None of this is surprising, and none of it should be surprising in my humble opinion. Why? Because let's take a look at the monthly time frame. Once you break out of a long-term range, and we were ranging between $30 and $17, we're in this symmetrical triangle pattern here. Once you break out, not every single time, but a lot of the time, you can come back to test the area in which you broke out from. One could argue that the breakout area was this downtrend line. However, one could also argue, and I would, that the breakout area, it just happened to coincide with this downtrend line, but really it's at this very key Fibonacci level at $25.70 US cents. You can roughly call it the $26 area. Okay, 26 has been a big line in the sand for silver. For my new subscribers, take a look very quickly. I know my old subscribers have seen this a million times before, but you really want that lesson. $26. Once we hit $50 in 2011, 26 right here is a very old Fibonacci level from the old highs. Just so you know, we're on the logarithmic scale right here. Can you see that? Good. The old highs of 1980, 1979, and the old lows of the early 90s. This level and this level has been informing, in my humble opinion, the price action since then, really since the peak in 2011. So $26 right here, that Fibonacci level, which happened to be the 0.5 level from this high and this low. Key level, which we never thought, 26. Oh, I won't go below 26. Support level. That's another support level. We're never going below 26 ever again. Look, we're back up, people. This is fantastic. Look, 26 will be a support level again. Uh-oh, no, it wasn't. All right, out of interest, on the day, and I've mentioned this before, on the day that I started at my very first gold dealer in bullion retail industry, that was the day in April of 2013, overnight, where gold finally dropped below 26 US dollars. I started my first day at Goldstackers in April of 2013, and the line was out the door because people were like, holy shit, it is gone under $26. That's crazy. So we had a lot of people buying then. Okay, and since then, 25.70, 26 US dollars has failed to hold for any significant period of time. Right here, we went up to $30. Once a couple of months. Then no, 26. Nope, failed. Tried again, failed. Tried again, failed. Tried, failed. resistance, resistance, finally. Since breaking through in 2013, finally, here in April of 2024, 11 years later, we broke out and we closed above. Then we broke out and we closed above. Then we closed above 26 again. That's 3 months closing above 25.70, 26 US dollars. Then we closed above again for a 4th month. We have still closed above, where we're still in August, and we've yet to close below a month of 26 US dollars. That's why for me, it's the major line in the sand. For many people it is too. Broke out of this range. I think that's the big line in the sand. You don't want to see that broken. So, but coming back down to here, absolutely reasonable when you break out and you come back and test it. I think it will hold, in my humble opinion, on the monthly time frame. We could come back down and spike down to this trend line right here. I think that would be a quick spike anywhere down to roughly 25 US dollars. You would want to see that as a spike on the monthly candles, and you would want to go blip, 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 and close the month above 26. That's really healthy. It's very healthy. Now, again, I am not a silver moon boy. I'm not a precious moon boy. I'm not a moon boy for anything. But I'm still very positive on silver and positive on gold because we had a big move. You come back, you retest it. That's great. What you do want to see is that hold. And that's why I did have it as the bottom end of my best buy zone between 28 to 26 US dollars. Spike down, that's cool. Close the month at or above 25.70, 26. Par for course. We're okay. So that's pretty much it for silver. Do I give you a guarantee it's going to go lower from here? Nope. I will say, though, we are in the best buy zone, and I've been saying this for a while. Before we got into this best buy zone, I drew this best buy zone, I don't know, somewhere around here-ish, something like that, in May, in June, something. I said, watch out for the best buy zone. This is an area in which you would want to consider loading up a bit more around about this time, because of this huge area of that 26 and anywhere up to that $2 move up to 28. It was looking like a decent support level. It's remained a little bit of decent support, but we have cracked into it. So you're right into the belly of the best buy zone. At the moment, great opportunity to dollar cost average in. I do not give financial advice, but hey, if it's getting into this area, it's kind of the best risk to reward. Could we absolutely see the bottom fall out in silver and then we break back down below here? That ain't good. If we did, that's not good. Yeah, of course we could. Anything can happen. If we take a look at the relative strength index on the weekly time frame, there is room to move down. We have had the double top on the relative strength index, overbought, double top. We did mention that double top, didn't look good. We had that move and the rally and no dead cat bounce. And down she goes, and she's still going down. Out of interest, that was very Aussie. We are trending down, but on the weekly time frame, on the weekly relative strength index, there's a lot of support around here at that sort of 43-ish, 40-ish kind of level. I could even pop that down to there if you want. Something like that. Around here, 40 to 44 on the relative strength index. There's a lot of support there, which could lead me, to say that's why, that 26 here is a big line in the sand. Spike down maybe, but that could coincide with coming down to here. Okay, on the daily time frame, as I said, we're ticking over. My bet is we probably come into the extremely oversold territory on the daily time frame this time around. I'm guessing we do. I'd say more than 50% chance we get into extremely oversold on the daily time frame on silver. So that means we would see a bit more of a silver dip. Again, not saying 100% it is, but around about this area right here. Again, I'll put it here. Let's see. Rectangle. That area right there. You want to see it spike. You could see it anywhere. No. Yeah, I'll keep it there. That area there, top end 26, that could easily be hit. Okay, you just want to see that hold. If we don't see that hold, that doesn't look great for the silver price. Okay, if we get back into this symmetrical triangle pattern, and that's the sort of the apex of that symmetrical triangle pattern. The absolute bare bones bottom would be right here, and that's at like your 23, 24. That could be the ultimate fake out. Yeah, it could be. You break down below there, and then it's all over for silver. It's bear market, in my humble opinion. You'd be coming back down to 20, and then kind of who knows from there. So above 26, above this area here, it's looking just a perfectly nice, decent correction. I'm still 99% sure we're in a bull market for silver. We've just got to watch this area here. Hopefully we don't get there, and that might be good for you. Just dollar cost average is the best way to go. What negates all of this? Of course, breaking back above. The back in business line is at $29.80 US. We're back in business. It's bull market, and we're just on our way. 100%. And we're still in a bull market right now, but 100% confirmation for me, barring black swan events and market manipulation, is the final hurdle of closing any month above $31 US. That says, oh no, it's go time. And we'd be making new interim all-time highs. We'd be heading up to the $37 to $40 US mark in 2024. That would be the next kind of major area. That's the zones you have to watch out for, but we are in the best buy zone for silver at the moment. Not in the best buy zone for gold. As I said, that's got a little bit of room to move, but I'm not definitely saying we're going there. We've just got to hold above that 23.50. Gold to silver ratio, let's quickly do that. Ouch. Now, I say ouch because I'm basically all silver. So look, it's, if gold and silver go up at the same time, hey, that's fantastic. I should probably consider reevaluating my gold to silver ratio. I'm pretty much all silver. I have a little bit of gold. But I say ouch in terms of if you're a silver holder, we are skirting towards the gold taking over area. We are at the top end. Now, we haven't closed a week or a day below it, thankfully. But this area right here is the no man's land area for gold and silver. There's indeterminate whether gold will reign supreme for the next months coming or whether silver will remain supreme for the months coming. We're in this no man's land. If we close, I would say any day above this downtrend line, then it's looking like gold's going to continue its run against silver. So we'll continue to outperform for at least, a number of weeks. Breaking below here, then it just says, okay, a little bit of an overperformance for gold, but silver's still continuing its downward trend. And if you are on silver and you want to swap a bunch of silver for gold, you want to see this go down. But at the moment, we're at the top end. Luckily, we have not closed any day above this area there, so it still have to remain in the indeterminate area. The direction is moving in gold's favor, though, I will say. On the weekly time frame, on the gold to silver ratio, we are trending upwards. So we are trending that gold will continue to outperform silver, but we're not out of the woods just yet. We're just in that indeterminate area. Does that make sense? Good. That's really all I've got to say for the gold to silver ratio, except watch out for the big level right here at 93. If we close any, let me put that in. That's not letting me put text. Final hurdle, close monthly. If we close any month on the gold to silver ratio above 93, and I'll pop it over here, coordinates, visibility, style, text, bottom right, top right. If we close any month above 93, then it's like, oh man, it's really gold's continuing time to shine, and you're probably going to come up and test this general area. You'll head over 100, maybe back up to 110, roughly like that. So again, your precious metals in fiat dollar currency could be both going up. So that's great news for you. It's just if you're playing the gold to silver ratio and you're trying to maximize your precious metals investments. So just watch out for that 93, but we're not there yet. We're still in that indeterminate range. What you really want to see is breaking below and then continuing lower. Out of interest for the new subscribers, my big If silver continues its big run, this is on the monthly time frame. The big one where you would consider swapping a bunch of your silver for gold is at the halfway point at the 50 mark. Why? I won't go into all the details. That's just out of interest. For you, that is gold, silver. Gold to silver ratio. We did gold against the SPX 500. It's coming to an interesting point there. That would really signal, as I said, gold taking over, precious metals. Let's take a look at platinum. We have basically hit it. Technically, we didn't hit the very top end of my best buy zone, but it was close enough for jazz. The head and shoulders pattern has been playing out. Left shoulder, head, right shoulder. I said watch out for here as resistance. It was a resistance. And I said while we are below this long-term downtrend line from 2008, we are going to head down to at least the top end of my best buy zone, butting up against this uptrend line right here. And we've seen basically on the money a touch at 906, 905 US dollars. Technically, it hasn't hit my top end of my best buy zone at 900. Yeah, call it close enough for jazz at the moment. While we are below, I would say 950. I'm going to move that to here now. No, I'll move it to here. While we are below 900 and I'll call it right there. No, 945 US dollars. While we are below there, we are going down to hit my best buy zone, and we're probably going to break this level right here while we are below there. If we break above and close above 950, 945, 950, then I would say, okay, all right, this is not going to be taken out. As of right now, this is going to be taken out probably, I'll give it the 80% chance that this is taken out, and the best buy zone somewhere in there being hit anywhere down from 900 to 750 US dollars. Watch out for 840 as the big support level. Okay. I'm not definitely saying it's going to break. Okay. Could find support here and then crack back up above 945, 950. And that's good news for platinum. Good. Maybe you copped a great deal here at 905 USD and good for you. Okay. But we're just in the depressed zone for platinum. Here is the depressed zone. Here is the getting excited zone. And here is the whatever zone. Here is the getting excited zone. And until we close any month above 1,120, I'm still like, okay, see what happens. When we close 1,120, that's full bull for platinum for me. But we're nowhere near that at the moment. We have hit basically the top end of my best buy zone. That's pretty much it for platinum. I have not much else to say except platinum against gold. We've been talking about platinum against gold, so let's quickly do that. That's platinum against the SPX. Platinum against gold on the monthly time frame is at the lowest point it has ever been historically. Does that mean we can't go any lower? No. Is there room to move down? Yes. Out of interest, we are still above this long-term downtrend line from 2008. We were below it for a long time. We cracked above it and we have remained support. Again, this is the platinum to gold ratio. As this is going up, platinum's outperforming gold. As this is going down, gold is outperforming platinum. Okay, we're still above this downtrend line. Okay, so you can potentially watch this as support. If we break this level and we close any month below it, then that's not good for the platinum to gold ratio. You would continue to see gold outperform platinum for at least another few months. At least till we find some kind of bottom. I don't know where that bottom is, but on the good news, we haven't cracked this downtrend line. So again, historically at the lowest low it can possibly be against gold. So many people do believe that we're kind of around the bottom for the platinum to gold ratio. I don't know. I'm not a soothsayer, but many people are buying platinum here instead of gold. Okay, and they're happy to play the dollar cost averaging while we're below this level. And that's just the platinum to gold ratio. Keep that in the back of your mind. Platinum to silver ratio, yeah, you're at historical lows as well. Am I saying buy platinum here? Definitely not, but it's just look out for it. It's very historically low. Okay, gold, silver, platinum, out of interest. Let's quickly look at the Australian dollar to US dollar. We're back up in the range. Okay. We've done an hour's show, so I have to get out of here, but I knew this would be a long one. We have spiked down. Ooh, shoot. We broke down through this very, very, very long term, all the way back to March of 2020, COVID low, and the very long-term downtrend line going all the way back to, well, a long, long time. Okay, we finally broke it, but we have, so far it's a fake out. So we're still closing within that range. Is on the weekly time frame. It's not until you close a day or a week, a day or a larger time frame below this downtrend line that you say, the Australian dollar is going to continue to weaken against the US dollar and probably come down to around about the 60-cent mark at least, I would suggest. But no, this was a fake out here, potential fake out here, so we're still within the no man's land. It will make its decision either way by no later than January of next year, and I would say really no later than about November. It has to make its decision. Is it going to continue to break up? Was that there, or is it going to continue to break down? Let me know in the comments. Do you think the Aussie dollar will continue to weaken against the US dollar over the next 6 months? I want to know your thoughts. If you don't know, you'll be in the same boat as me. That is it. Gold, silver, platinum, gold to silver ratio, all that other stuff. And I'm going to get to your comments. But the general thing is, don't worry, we'll all be fine in the end. Do you have insurance? Okay. Do I worry if I get in a car accident? Well, yes, because I don't want to get hurt and I don't want my family to get hurt. Am I worried for the car? And am I worried for my financial situation? No. Why? Because I have car insurance. Am I worried if I die? Yes, because I don't want to die. I don't want to leave my family. Don't want my family to be without their father. Do I worry for my family's immediate term financial future? No, because I have life insurance. Do I want my house to burn down? No. Do I have 2 fire extinguishers in my house? Yes, because I have insurance. Do I worry about starving to death? Not really. It's probably not going to happen. Do I have some emergency food? Yes. Why? Well, in case something really bad happens, a natural disaster, in case rampant inflation. Did I happen to buy, a decent amount of, food that is easily storable for a long period of time? Did I happen to buy it when it was a really good price? Yes. To buy it now is a lot higher? Yes. Okay. Is it still good? Can I still eat it? Yes, I can. Okay. You have insurance, and that's why you have silver, and that's why you have gold as a form of insurance. I would say gold is more the insurance than silver. You're playing the silver thing because of the potential benefit against gold in particular. So if you're just looking for insurance, let me turn that off. If you're just looking for insurance, then probably just buy gold is probably your safest bet. If you're a little bit riskier and you're happy to take that risk, buy silver as well. I'm a bit of a riskier guy, so I'm pretty much all in silver. But it's an insurance policy. So are we going to be fine over the longer term? Yes. Could we have a dip 50% in the stock market? Yes. Would that be an amazing opportunity to buy the stock market and buy stuff that's down? Hell yes. Individual stocks? No. Except maybe Tesla. But have we always come back in the end? Yes. So are we in this meltdown? It's a meltdown. It's quote-unquote meltdown. We'll all be fine in the end. We always have been and we always will be unless we get hit by an asteroid. Okay? That's pretty much it. So don't stress. Have some dry powder. Take a chill pill and relax. Have some dry powder. If it goes down more, great. That's great for you. Okay? If you're doing all things right, if you're buying at peaks and you're putting all your money in, I've got to say that's not the world's greatest strategy. Okay? Let's see. Lance has been saying, we'll get to all the comments and the queries and the questions. I've been averaging some buys. Yes, you said. Good on you. Averaging is the way to go. Daniel says, I haven't bought for some time now, but it is a great time. Yes, I do agree. CT said, I bought some on Friday. Laugh out loud. Did silver drop to $3 AUD? Yes. Okay. Quickly, AUD. Sorry, gang. AUD. This is going to be a really long show, but I knew it would be. Very quickly. For my Aussie subscribers, we made a new all-time high in gold on the daily time frame. Look, we spiked here $3,830 per gold ounce. Now, my US people are going, why the hell are you making all-time highs in your currency? Well, as I showed you, because our Australian dollar has been weakening over the long term against the US dollar. So when a foreign currency weakens against the US dollar, you find the assets denominated in that foreign currency will go up. Does that make sense? So that's a long-term downtrend right there. Okay, so that's why gold in Australian dollars has been, this is the monthly time frame for gold. Look at that. We made a brand new all-time high in gold. So congratulations if you're in, gold in Australian dollars. If you're an Aussie gold stacker, fantastic, congratulations. Silver in Australian dollars, we've dropped, a couple of bucks. Yeah, so just in recent months. But we've actually made new all-time highs in, well, this is against this particular one. So 50-50, yeah, around about new all-time highs. We made new all-time highs in silver for Australian dollars as well. So $48.50, nearly 50 Australian dollars per gold ounce for the spot price, not talking about premiums. Good luck, getting gold and silver for spot price. Obviously, you're buying for a bullion dealer, you're going to pay a premium. But that's to just show you, we are in Australian dollar terms. Look, total bull market. We're in bull market for silver in US dollar terms, but look, same thing. 2011. Look at that. That's a big cup right there. Bit of a handle, maybe, I don't know. But look, we're looking great for silver in Australian dollars as well as gold, as well as US dollars, I should say. Now I'm mumbling and rambling like Joe Biden. Let's go back to the daily, and that's all you need to know for there. New all-time high in gold on the Australian dollar. But again, it all depends on what the Australian dollar is going to continue to do against the US dollar. That's why I will continue to read your comments. Mark Florida says, got a little destined for a boat accident in the near future. Let's say lots of precious metals on those old shipwrecks. Yes, I would agree with that. Tony Internet says, no. Final. Daniel says, I keep enough cash for what I need. Yep, but I don't consider it savings. Yeah, it's not savings because over the long term it's getting eroded away. Yes, of course. But it's saving for the short term, what happens. Okay. Tony Peterson says, Joe is my only analysis charts I watch these days. Thanks, Tony. I appreciate it. If you like what I'm doing, we're going to get going in the next 5 minutes probably. Hit the big red subscribe button to join the GMS family. You get a week daily live show. Just so everyone knows, I will be very soon-ish starting a private membership only situation, as well as the completely live show, which we'll always do, the free show. This will include discounts from Perth Bullion Exchange. It may also include a bunch of other content to do with regular stock market stuff, economy stuff, well, stock market, crypto stuff I talk about. I want to keep this live thing, this free thing, this channel for gold and silver mainly, and economic stuff. I'll talk crypto, I'll talk prepping, I'll talk health and wellness, a bunch of other free content. So a bunch of other content on the paid channel, and there'll be a couple of membership tiers in which you can get discounts from Perth Bullion Exchange. And it'll be really, really good. And extra specials and things like that. So $1 incentive for you to join. But hit the big red subscribe button to join. I don't like to keep much cash in the bank either. Yeah, I don't think any of us do, really. Silver at BN 42 in terms of its spot price. Waiting for the bank bail-in. Oh, you reckon? Tony Peterson, waiting for the bank bail-in. It'll probably happen on a Friday. Well, if it did, it would happen on a Friday. I do agree. David Williams, fantastic. What a plug for Perth Bullion Exchange. Perth Bullion Exchange also ship same day. Yes. If you purchase and pay for and they receive it within the same day, then they'll ship that same day so long as they've received payment. It's anywhere up till 2 p.m. Perth time, which is like 4 p.m. here. So if you make payment by 4 p.m. on the eastern seaboard of Australia, They'll ship it out the same day and you can get it overnight. It's mental, I tell you. Overnight Sydney to Perth. Overnight Perth to Sydney. Crazy. Okay, I love BN, but they take forever to ship. They're also a lot busier at the moment, so yeah, I can see the 6 of one, half a dozen of the other. They also have a lot of stuff no one else has. Yes, Perth Bullion Exchange does have a lot of stuff no one else has, and they aren't always out of stock. That's also true. So I'm also very impressed with Perth Bullion Exchange. Aussie market is about to open. Yep, absolutely. You made it to the live, FST. Great, fantastic. Let's see. He is on the record for not liking that spike. I am on the record for not liking that spike. I know what you're talking about. It takes a while to consolidate orders. Yeah, would be my guess. Got to cross the T's and dot the I's. I absolutely agree. So I don't get angry at any bullion dealer for going, it's taking too long to ship. It's like, well, you'll get your medal eventually. I've worked for 3 bullion dealers and my own as well when I did my own. So you got to see the back end of it. If there are a lot of orders in the system, are you one of 55 orders in that day, or 200 orders in that week, or 300 orders in that week? You've just got to go through the process and you've just got to wait. So when I was in the bullion industry, serving customers and emails and phone calls and getting all that, we get the very occasional, we get the regular emails from people going, I ordered yesterday and my order hasn't been shipped. It's like, okay, what's the price doing right now? Is every man and his dog buying silver because it's just absolutely tanked? Okay, so what number are you in the order queue? All right, so just chill, everyone. So yes, I don't begrudge any bullion dealer that if sometimes it takes them a long time, just because they've got a lot of orders to deal with. So I agree with that, Tony. Cut people some slack. Strange as, great to see you, GMS. You bought some silver, first time in a few months. Well, that's fantastic. Good on you. FST says, I think prices will be basically the same as now if it dips. See, this is the other thing you have to consider. Due to the premiums going up as people flood, right? So, market can dip, have a huge dip. Everyone piles in, but beforehand, the bullion dealers, very rightly so, go, I don't want to run out of stock tomorrow, so I'm going to have to raise my premiums a bit to sort of spread out the love, so not 2 people just jump on and go, I'm just going to buy everything. Okay, so generally prices go down, the premiums will go up for a little bit. As premiums rise, as the price rises and rises and rises, you will see premiums go down a bit because people are like, the price is really high, so no one else is buying because they think it's too high, so I'll lower my premium. So it is an evening out situation. I do agree. Hit the like, guys, says Knackers O'Reilly. I do agree with that. Do that right now. Damien Geyer. Agreed. So many listeners. Give the man a like. Thank you. We're nearly out of here, people. I always use the dips to catch up on designs I don't have. Whereas low mintage releases must be bought ASAP regardless of spot price. Absolutely agree with that. If the new, when the Brumby coin comes out, you want to get it on the first couple of days or else it's going to sell out. And regardless of what the premium is. I agree, because the premium will remain the same or even higher, not that much down the track. Will silver pump over the next few days with the impending attack? I don't know if it's impending, but, in a time of war, gold does well, silver tends to follow. I'm a huge fan of Pressburg Mint stuff, Equilibrium, Vivid Humanity, Kronos. I've never heard of any of those. They sound really interesting. I love the note now you're talking about mintages. Anything about the... It feels like we're talking in class while Joe the teacher is lecturing. I'll pay attention. That's fine with me. I'm cool if the students talk while I do my silver analysis because you can watch it on the replay as well. And this thing is you're joining a community here. You're not just joining the GMS family to watch my gold, silver, platinum analysis every single weekday and economic news and topics of the day and all that kind of stuff and sort of bigger life things, right? You're doing it to join the community and you can trade with each other. You get to know each other. It's a big family. What happens if something big happens in the world? And this is our little go-to community to see if everyone's okay, all that kind of stuff, right? Let's see. Been using. I think that's almost it, people. It's good to have a reliable supplier when you have to ship overseas, right? I agree with that. Wonderful detailed analysis, Joe. Thank you. You are welcome. Hazza. Joe's analysis is always super honest as he sees it at the time. I do. I just call it as I see it. Yep. Possibly dumb. Here we go. Possibly dumb question. How do you look at silver versus the SPX? Okay, I'll give you a quick. This is going to be the world's longest live stream. This is going to be the longest live stream I've ever done, I think. How do you look at the silver versus the SPX ratio? Great. So if you go to tradingview.com, let's go there right now, share the screen. Tradingview.com. Or any kind of interactive chart. I like tradingview.com. You can sign up for a free account. You don't have to pay for it. As far as I'm aware, I'm pretty sure you can do ratios with the free account. But here's how you would do it. You go into the interactive chart section. Now, I actually already have a silver versus SPX ratio, but I'll show you how to do it. Okay. You would go over. Can you see my screen? Can you see my screen? You can't, but there's a little plus button over here. That takes you to here. What you do is you type in silver / then you look at the next thing you do, and you go SPX 500. Then rather than then you've got to click on the first one or click on that one, then hit enter. That's it, right? That will bring up and then you scroll down to the bottom of your thing, and it's right down here. So this is silver to XPS ratio. Okay, I actually do happen to have one previously drawn in, and I think I have some. This is all my crypto stuff too. Not that I'm all in this crypto. I just watch all of it, and all the other stuff. These are all anything in pink right here, by the way, are my ratios that I'm watching. You know, Bitcoin versus gold, Bitcoin versus silver, Ethereum, gold miners versus the stock ratio versus the SPX. I have a whole bunch of Tesla versus gold, Tesla versus uranium miners, like a whole bunch of different things. I have Bitcoin versus the Australian house pricing index. So these are all my ratios. Silver versus SPX right there. So that's it. That's how you find it, and that's what it is right now. It's again quite low against the stock market index. You would find a support level very quickly right there. I think is around about. Makes sense to you? Makes sense to me. Around there-ish at the 0.005 level, which we are still kind of roughly there. That's your support level. You see it close below there, then the stock market will continue to outperform silver. Anywhere in here, you're in the no man's land, and just like gold, there is a final hurdle. So out of interest, nope, that's not what I wanted. My apologies. Out of interest, right here. Final hurdle, monthly close. Monthly close. Thanks if you're still watching. You are troopers. I tell you what, you've got nothing better to do with your day. Get back to work, people. Final close, monthly, right there. Jeez, it's just annoying. Why it does this to me? There we go. Move that, pop that there. Final hurdle, is it around the 0.006 mark for me-ish? I'd actually call it, you know what, I'm going to move that. Yeah, no. No, I'm going to move it. There we go, right there. 0.7. When we close any month, we close any month at or above 0.7, preferably above 0.007 on the silver to stock market ratio. That is just like you would already be seeing gold over that halfway mark. You'd be seeing silver above there. So then you'd be saying, wow, silver against the stock market is going to continue to outperform. That's again when you would see, and you already would have seen, big stock market bull people go, oh, I think I'm going to rotate into gold now, into precious metals. and they might consider doing that in silver too. So around about that level, we're just in the no man's land right there. That's all you needed to know. Man, this is going to be a long show right here. Expect the best, prepare for the worst, says Tony. Best way to do it. Don't try and catch a falling knife. Agree, David Williams. Dollar cost average is your best way to go. Metals are the best hedge against inflation and devaluation of fiat currency. Do agree. Damien says silver is very undervalued. Not sure when, but it has to go. Not sure when, but it's got to go at some point, as in go that way. Absolutely agree. Any recommendations on where to buy platinum in Australia? Any of the dealers that sell platinum? I've worked for 3 different bullion dealers. I worked for Goldstackers, buy platinum from them. I worked for Bullion Now, buy platinum from them. I worked for Ainslie Bullion, buy platinum from them. My brand partner, Perth Bullion Exchange, doesn't sell platinum yet. But, maybe that will be the case. So any one of the big ones. Is probably the only major dealer that I'm talking about, well, there's 2 of them actually. One of them in particular that's based on the very southern end of Australia on the eastern board. I wouldn't recommend buying from that particular dealer just because I just think they're the big boy. They're the really, really big boys, and they know it, and they treat everyone else the same way, and they treat it like they are. That's all I'll say. Some people won't be fine. Remember, very few stack. That's true. Some people won't be fine. That's true. In terms of, yes, if we go through a depression or a 50% move, no, some people won't be fine in the short term. Some people will lose their shirts, lose their houses. It's terrible. I think, although in the long term, it's not a civilization ending thing. But yes, individual people, some people might get really, really hurt. Some people have been really, really hurt in the past. But again, I'm talking about on a big macro level. We'll all be fine in the end. But yes, individuals, certainly not. I do agree with that. Finally, we're getting to the last ones. Thanks, Joe, and much appreciated. I'd rather just watch don't call me that, but I'd rather just watch Joe than try to wade through the data myself. Yes, and here's my feeling with that, Tony, and we'll get to the end of the show. Listen to all and follow none. That's a big saying by Tony would know, by Chris Dwayne. Chris Dwayne is a long-term silver stacker, complete OG in the gold and silver, like Mike Maloney. Chris Dwayne, big OG in the, even more of an OG than me. I only started stacking in 2010. So Chris is one of the big, Chris Dwayne, one of the big OGs. And he says, listen to all and follow none. And I do agree with that mantra. Listen to all, follow none. And don't trust any expert, because we're grabbing in the dark, really. Do I know exactly what's going to happen with the economy? No. Does anyone? No. And you don't either. Okay? No one does. That's why you just have insurance policies. Okay? Don't put all your eggs in one basket, blah, blah, blah. I will say, though, and I will toot my horn, and I think I've proven this for a bit, from a technical analysis perspective on precious metals in particular, I think I've been pretty good. And I'm not saying you should just absolutely just follow me and all that. It's only because I've been in crypto since 2013, and you get a real big quick learning curve. It's just so much more volatile. It's like I watch gold and silver in slow motion. It's like it's running through molasses. It's like you can see the support and resistance zones way ahead of time. And again, like crypto, the time window is so small that sometimes it's harder to catch the falling knife. It's harder to catch. It's more easier to catch the big support and big resistance levels, barring black swan events. So that's why I'm not bad at this TA stuff on the gold and silver in particular. I still say, Joe, would rather rock a brohawk though. Appreciate your insights, and that's it. Okay. Nearly an hour and a half. That is it, people. We are going to go. Thank you so much for watching. We are dropping off in the live watches as well, because you've got things to do, and so do I. Hit the big red subscribe button to join the family. I will see you tomorrow for a much shorter show. I promise you it will be. And we dance off.
Oh yeah, we're feeling fine.
Thanks for watching. tomorrow, make sure you have your...
Grab a tasty beverage.
And we'll do that.
Get in the groove. Synchronised, slurp. Now we're
Sorry, caught you off guard. Thank you very much for watching, everyone. We'll all be fine in the end from a big global macro perspective. It's all cool. Have some dry powder to buy the dips in the stock market or precious metals or anything that you want. It's not life-ending. Okay, that's pretty much it. Stay safe, stay informed, keep stacking, and I will see you tomorrow. Thanks for watching.